Right now, as we look at the board, Nuburu Inc. is trading at exactly 0.21 USD. We are seeing some movement today, with the stock up 0.0070, which translates to a gain of roughly 3.43% for the session. While a 3% move might look massive on a percentage basis, we have to ground ourselves in the absolute reality of what we are seeing here. This is a stock trading for 21 cents. The expectation when you see a percentage gain like that on a ticker tape is often excitement, a sense that a turnaround is imminent or that the bottom has finally been found. It triggers that impulse in self-investing, where you feel like you have spotted a diamond in the rough before the crowd arrives. But the reality is often much more complex and, frankly, more dangerous. A move of less than a penny can create a 3% swing, which tells us less about strong bullish momentum and more about the extreme fragility and lack of liquidity at these price levels. This isn't Nvidia stock moving 3% on billions of dollars of volume. This is a microcap struggling to find its footing in a market that has been largely unforgiving to speculative industrial technology. When you open your Fidelity mobile app or glance at your Interactive Brokers trading screen, seeing green is always better than seeing red, but we need to strip away the emotion and look at the mechanics of this move. The volume behind this 3.43% rise is the critical factor. If this push to 21 cents is happening on thin volume, it suggests that there aren't actually many buyers stepping in, but rather a lack of sellers at this specific micro level. It is a vacuum up, not a rocket launch. The general belief, the expectation holding many retail traders in this stock, is that Nuburu's blue laser technology is so superior for welding copper and gold that the stock price must eventually reflect that utility. Investors look at the massive shift toward electrification. They think about Tesla stock and the batteries that power those vehicles, and they draw a straight line between EV manufacturing and Nuburu. They assume that because the tech works, the stock must work. The reality, however, is that great technology often exists inside broken equity structures. The market is not currently pricing in the brilliance of the blue laser. It is pricing in the cash burn, the capital intensity, and the sheer difficulty of scaling hardware sales in a high interest rate environment. Let's examine what is happening intraday right now. That push to 21 USD is facing resistance. In the world of online investing, psychological barriers are real. When a stock is this cheap, every single cent increment becomes a trench war. There are bag holders, people who bought it 30 cents, 40 cents, or even higher, who are looking for any liquidity to exit their positions. This creates a ceiling. You might be using Fidelity investments for your long-term holds, sitting back and watching compound interest work, but a stock like Nuburu requires a completely different mindset. It requires the agility of a day trader. The price action we are seeing today, that oscillation around the 21-cent mark, is a battle between short-term speculators hoping for a quick flip and long-term believers who are slowly losing patience. It is not the steady, upward grind you want to see in your Schwab Intelligent portfolios. It is jagged, nervous, and erratic. We also have to consider the broader context of how people are accessing this stock. A trader using the Robinhood app might see this low price as an affordable lottery ticket. The barrier to entry is non-existent. You can buy 1,000 shares for the price of a nice dinner. This accessibility is a double-edged sword. It brings in retail capital, sure, but it also brings in weak hands, investors who will panic sell the moment the stock drops a penny. This contributes to the volatility we are watching today. Unlike Apple stock, which has a massive base of institutional support that stabilizes the price, Nuburu is largely at the mercy of retail sentiment and market maker algorithms. The Robinhood stock trading community often rallies around these low-float names, creating temporary spikes that have nothing to do with business fundamentals and everything to do with momentum. But when that momentum fades, the drop can be precipitous. This is why investment help services often advise extreme caution with stocks trading under $1. The rules of the game are different down here. Now, let's talk about the institutional side. While you might be managing your individual brokerage account from your phone, the big players are looking at this through a different lens. They are using sophisticated interactive brokers' platform setups to analyze the order book depth. What they are likely seeing is a company that is fundamentally undervalued relative to its intellectual property, but overvalued relative to its current balance sheet. This is the tension, the value trap. You look at the market cap and think, surely the patents alone are worth more than this. That is the expectation. The reality is that intellectual property is hard to monetize quickly when you're running low on cash. If you are using Fidelity Wealth Management Services, your advisor would likely categorize this as a high-risk speculative growth asset, if they touched it at all. The institutional activity, or lack thereof, in Nuburu tells us a lot. If big funds believed this was the next big industrial giant, we would see sustained, heavy buying volume pushing the price well past 0.21 USD. The fact that we are hovering here suggests the smart money is still in wait-and-see mode, or perhaps wait and hope. But why is the market so hesitant? To understand that, we have to look at the core business. Nuburu isn't just selling widgets, they're selling a fundamental shift in how we process metals. Infrared lasers, the industry standard, are great for cutting steel, but they're terrible for welding copper. Copper reflects infrared light. It's physics. Nuburu's blue lasers are absorbed by copper. This means cleaner welds, faster speeds, and less defects. In theory, every battery manufacturer, every consumer electronic company, every EV maker should be knocking down their door. This is the blue laser narrative that hooks investors. It's why you might see this ticker discussed in Fidelity ETFs focused on advanced manufacturing or innovation. But here is the cold water. Industrial adoption cycles are painfully slow. A car company doesn't just switch its welding line overnight. It takes years of testing, validation, and retooling. Nuburu is trying to survive that long, treacherous validation period while the clock ticks on their funding. This brings us back to the chart. The 0.21 USD price point is not arbitrary. It represents the market's assessment of that survival probability. If you are involved in online investing, you know that price is truth. The truth right now is that the market is demanding proof of scale. The bump to plus 3.43% today is a glimmer of hope, perhaps driven by a press release, a rumor, or just technical oversold conditions bouncing back. But without a fundamental catalyst, like a major contract announcement or a significant injection of non-dilutive capital, this move is fragile. Traders using SoFi Invest to manage their aggressive portfolios need to be watching the volume closely. Is the volume rising as the price rises? If not, this is a divergence, and it usually ends with the price rolling back over. Compare this situation to SoFi stocks generally, or the fintech sector. In fintech, growth can be exponential because it's software. In Nuburu's world, growth is physical. You have to build the laser, ship the laser, install the laser. It is capital heavy. This is why the comparison to NVIDIA stock is so unfair, yet so common. NVIDIA designs chips. They don't do the fab work themselves in the same way that Nuburu has to manage its supply chain. Nuburu is fighting a hardware battle in a software-obsessed market. For those of you engaging in self-investing, it is crucial to understand this distinction. You are not just betting on a cool laser. You are betting on a manufacturing supply chain and sales cycle that is incredibly difficult to execute. I want you to pause for a second and really think about your own portfolio strategy. Comment below how many shares of Nuburu you currently hold. And more importantly, what is your average cost basis? Are you currently green at 0.21 USD, or are you holding from much higher levels? It's important to see where the community stands to understand the potential selling pressure if the stock does rally. Let's look deeper at the macro pressures affecting this 0.21 USD. We are in an economic environment that punishes unprofitable companies. When interest rates are high, the cost of borrowing capital to fund operations becomes expensive. Nuburu needs cash to grow. If they have to raise money, they might have to issue more shares, which dilutes existing shareholders. This is the fear keeping the price suppressed. It's the ghost haunting the chart. Even if you use fidelity